Let's start recording. If you want to type those questions, go ahead. Okay, we're starting to record now. Go ahead. Go ahead, Ilya.
You want me to start the kind of presentation, or we should wait for everybody to arrive?
Well, if you want to type those questions for now, or up to you.
Okay. All right. I mean, I saw the questions from Bart in my GoToMeeting session. First question: I would have fixed enabled account with Ducoscopy. Do you provide data feed connectivity for this broker with your platform? In fact, yes, we do provide data feed for Ducoscopy, and we do have connectivity to Ducoscopy for fixed execution. So we definitely need to talk about what you can do with Ducoscopy. There's additional liquidity providers which could be of interest to you, so this is a separate conversation. But Ducoscopy is definitely something we work with. Capable of calibrating the inputs and optimizing strategies to squeeze out better performance and profits from the strategies. It's such a broad question. That's all we do. So I don't know if we're capable of doing it, but definitely that's our intent. So I'll show today a lot of different techniques, and I will be covering the whole process of squeezing best performance of the strategies. And the squeezing not necessarily relates to better parameters and better alpha generation techniques, but also smarter order routing and cleansing data in a better way and recording all the risk factors. So just this is more like a lifestyle rather than particular feature. But again, it will be definitely something we'll talk later. The third question is: Deltix capable of stress testing strategies by running on Monte Carlo analysis or any other stress testing methodology? The answer is yes and no. The backtester of Deltix could be externally called from any application, and all the inputs to the backtesting would be programmatically initialized. In fact, this question we'll answer it later. I'll come back to this. Is Deltix as well providing its customers with some kind of library of usable strategies or piece of code that can be used within strategies? I'll answer this question also later. What a Deltix approach to build new strategies?
Well, you're trying to attack that when that person comes in. Sorry about that, Ilya.
No problem. What is Deltix founder's approach to build new strategies? Briefly. Well, we do have our own research lab which builds a lot of strategies, but we're doing mostly for our own consumption. So we help people build strategies all the time. That's what we do, but we don't really promote our own strategies because we feel that we don't want to compete with you guys, and we don't want to impact your thinking, but we definitely publish ideas and observations all the time. We've got 60 people, so obviously something comes out of us. Is there any tutorials or videos? Yeah, we got tons of tutorials on how to build strategies. And Deltix, MATLAB, and R and Python, separate conversation. We've got a lot of stuff there. Right. Okay. Well, there's other questions. If there's advantages to have both MATLAB and Deltix running together, it depends. I mean, in some cases, definitely there's advantages because some things MATLAB does, we don't. Like if you want to use specific genetic optimizer inside MATLAB, or you want to use some specific garbage calculations inside R, then of course you should use it because something is familiar to you. I mean, in essence, we're selling, we still have 4 minutes, so I can basically pontificate. What we are producing, I'd rather call it not a tool or utility. I'd rather call it lifestyle. So we're in business of creating factories with processes. And when people live in their houses and they like their furniture, we're not going to tell people throw out your furniture and throw out all your habits and immediately jump to ours because they're better. We give the people choices. And there's so much good in MATLAB and there's so much good in R that it's just going to be completely impossible for me to say that don't use it. But at the same time, we offer so many other things which are better than MATLAB, And if you're willing to, I mean, there's always compromise in keeping heterogeneous environments. So my take on this is case by case. And if we build something called MATLAB Engine, which enables MATLAB deploying live for trading, so you can take MATLAB strategy and run it with Dukascopy or with anybody else. Yeah, you're going to pay for penalties related to latencies. So don't do it for market making or some kind of fast strategies. But if you are planning to run it on 10-second or 1-minute bars, then why not? So there's always, how do you debug the strategies? How do you prevent them from crashing? How do you deal with the resilience? That's a different story, and there's always challenges. So we'll get back to it. In essence, it deals couple of incorporating custom. Absolutely, we incorporate custom indicators. What are the plans for development for the platforms? So many plans, guys. But it's a great questions. I mean, I really appreciate. These are great questions. I'm so excited about them, and it's fantastic. I'm really already excited. So we'll wait for 2 more minutes, and then we'll go for the demo. I'll briefly say what I'm planning to do during the demo. I will walk for maybe 5 minutes through PowerPoint and try to be as quick as possible, just briefly touching the key concepts and key technological kind of buzzwords, I would say. And then I'll jump into demo. And what I hope to do is to build some simple strategy together, then to view a couple of strategies I built before and show some use cases where our platform is kind of relevant. And then we'll run 1 or 2 production scenarios. One of them I hope we'll do at City. I mean, we have running session with City at Equinix, so we'll go there and my computer and I'll show you what it means. And we'll deploy maybe 1 strategy live, on my paper account at my own kind of simulator. And then definitely we'll do question answers. And I hope it's just the beginning. It's just I'm really excited about presenting to all of you guys, and hopefully we'll do more demos and more conversations later. Okay, Brian, 7 o'clock. Should I start?
Yeah, we got quite a number of people. We got 18 already, so it's a good showing so far. I'm sure hopefully more people will be coming aboard. Go ahead. Okay. Ilya on line right now, who's the founder of Deltix. Take it away, my man.
Great. Thanks a lot. So first of all, it's I'm really grateful for the opportunity, and it's not just a buzzword to me. I mean that. Brian and I, we're both enthusiasts, and while we developed the software for many years, we've got quite a successful kind of business, I would call it. It's still like a child for us, and the Deltix stands for Development Laboratory for Technology Informatics, and we keep the spirit. And so what I'd like to do, I'd like to quickly tell you a little bit about the company. So we are specializing only in solutions for research and deployment of advanced quantitative strategies. Advanced is important, so we're working with institutional type of investors, and we want to democratize the field of institutional trading and let not necessarily institutional people become institutional in style. And we're doing it since 2005. We're in Boston. We got office in, we got 55 guys, 9 in States, New York and Boston, 1 in London, and 45 split between Minsk, Belarus, and St. Petersburg, Russia. We got around 60 clients right now. It's a little old number. We grow technology. I mean, basically who we are just computer scientists, engineers, and mathematicians. We're not traders. It's kind of strange how we ended up in this story, but it's going to be told later. The fact that we build very large software companies, I was chief technical officer of very large software companies prior to Deltix, and we all worked for many years in this industry, enable us to build technology first and then solving client problems. And the way we work, we don't really invent things ourselves. We listen to clients. By now we got around 110 clients working with us, and all of them contributed to this product. So everybody who works with us gives us some ideas and we incorporate them, and that's how basically it's all evolved. So in a nutshell, what do we do? we support the entire life cycle of strategy. We go through research, deploy, management phases. And like I said already, I don't believe that institutional investment or serious investment is just a one-time event. It's not like something you do once and then you're lucky, you come up with some idea and you capitalize on it. It's a never-ending kind of journey, and it has multiple components. And what we do, we enable all of them. And so we're building like a factory with certain type of discipline, and that's why I consider our system in some ways unique. So we work with any asset classes. We work with equities, futures, options, forex, any data periodicity from level 2 data to top of the book to news, fundamental data. You can view our system more like in a complex or rather advanced event processor. So we like multiplex all different events. An event could be market data update, or order rejected, or human being pushed the button, or news arrived. We take all these events, we synchronize them, we put them in a queue, and we process them. And you write code in our system as per event. So if you want to process something when new bit happen, or you want to process when another book snapshot took place, or you want to process something when order gets partially filled or rejected, you've got specific location, and you program this logic, and that's how the whole thing is basically put together. Through that, backtesting and real-time production is exactly the same code. Last bullet in the slide is also interesting. Not only we do alpha kind of this generation, what to buy and when, we combine it with execution management, which is how to execute. So dynamic subscription on different levels of data. You can start from bar data, subscribe to tick data, unsubscribe, subscribe then to level 2 data, unsubscribe. That you can do. In terms of technology, this is the process I talked about, this courtesy of 8 group, kind of data acquisition, discovery, backtesting, optimization, simulation, production. Our technology consists of 2 main components. One is quant server, which is server-side technology, consists of 2 independent entities. One is TimeBase, which competes with OneTick or KX. It's a specialized time series data warehouse, specifically designed to process terabytes of data, and also enables as a messaging middleware, so we can build multiple components, and they will be talking to each other through this kind of messages. And QuantOffice is a tool which is kind of .NET environment for building strategy, backtesting, and optimizing. And finally, the strategy server, which runs everything in production. It's fixed, of course, machine. It connects to different brokers. It hosts your strategies and enables remote management. In terms of our users, they portfolio managers, traders, quants, IT professionals. Difference between them, some people don't like to program or don't know how to program, and some people cannot stand graphical user interfaces. They absolutely demand everything to be visible at the level of Visual Studio. So roots of our company is automatic code generation. So as you use our system, we're going to write C# code behind your back, and then we publish it in Visual Studio and allow people to edit it and add additional flavor to the code. And so I definitely plan to show you some little example how it's all done. And then, of course, after that, this Visual Studio code can be put on our product or could be run from Visual Studio. In essence, you can view our system as a plugin to Visual Studio, or Visual Studio rather called plugin to Deltix. Architecture, we'll come back to it later, but it's pretty intuitive. Different feed handlers going through time-based messaging, populate to different layers of technology. And when we work in research, 2 engines, alpha engine, which decides what to buy, and an execution engine, which actually decides how to simulate your orders. In essence, this is even in backtesting phase. You have 2 completely separate components. They are obviously integrated, and you can basically control how the fields happen, how the whole thing put together. And when we go to production, we deploy it live and run on the servers which are allocated for execution and managed through remote controls. So ultimately, there's a bunch of libraries, bunch of utilities. It's a massively parallelized system. So, and like I said, time-based enables people to load historical data, take real-time data, and manage it. So, in a nutshell, what's good about us? Research, deploy, manage on a single platform. We work with execution. I think we're very fast and scalable. We also support visualization pretty much of everything. We work with any data sources. This is an interesting twist. We enable people to run not only baskets of instruments, I mean thousands of them, we also enabling baskets of strategies. So some of our clients deploy thousands of strategies like a machine gun and through parametric permutation, and they run trading into internal kind of crossing engine, and the meta strategy would be just looking at all the individual performances and apply optimization or whatever techniques to send orders for execution. And finally, platform is open. There's nothing proprietary, not a single comma or exclamation mark. So it's all pretty much standard C# and Java and all managed languages. And it's all enables you to basically don't depend on us in terms of holding you hostages. So you can develop system yourself. In essence, the underlying principle of Deltix was to build product which would be used as a tool set to build products for you. So you can build your own product, you can build your own environment, and that's kind of makes it good or bad. All right, that's kind of the quick introduction to our technology. So what I'd like to do at this point, I'd like to go to something called Quant Server Architect. And that's where we're going to spend the next 5 minutes. I'm going to walk you through what happens when you buy a product and configure it. And we've got two instances of the product. One is a cloud-based solution and one is institutional. And so what I'd like to do today is to walk you through institutional system, specifically so that at least we can all see where it all can end. So we provide kind of a layer of migration from easiest to more complex, and I'd like to present you like full advanced solution so that we can all do shortcuts in our head. So first of all, you've got multiple ways to even deploy our strategy, our system, I'm sorry. So our product consists of multiple components, and in the most institutional kind of way, you're going to have a standalone execution server, which would be responsible for managing orders and positions, which would be completely strategy independent. So if your strategy crashes, or if your server hangs, you still have access to all your orders and positions. Then you've got, of course, strategy server, which will host individual strategies and will host individual components. And here you can define all different feeds, and I mean, there's a lot of stuff happening. And then you got TimeBase, and so the whole process, and there's two different modes, like strategy server, execution server, or you can basically deploy strategy and execution server in one component. So in the demo today, I'll use this configuration, but we'll start from configuring that one just to have fun with it. So first thing we do is saying, okay, we'd like to receive market data and aggregate it. So we're choosing what data feed we'd like to use. Ability to provide your own data feed is very easy. So we, like all the effects-based data feeds, like ducoscopies or integrals or hotspots or current access, they're all available through kind of gateway, which we call quant stream. So inside quant stream, there will be a lot of different Forex-based liquidity providers. But if you want to go to different feed handlers like QuantHouse, you can see right now, right from the shelf, we supported ODT and IQ feed, interactive brokers, or CQG. You just click on them, and the feeds would be deployed as just basically predefined components. I mean, it looks easier than it is, but it's definitely not as difficult. Our professional services wrote tons of manuals, and this is all part of technology. Then we go to aggregator, and the job of aggregator would be to just control how every tick gets recorded in the storage and how it's delivered to messaging middleware. Then it goes to TimeBase, which is basically messaging middleware at this point, and then goes to storage. Then it goes to strategy server, and finally we go and choose the designated broker. This is a list of kind of pre-existing fixed connectivities. There's a lot of them. You can go directly to CME, or you can go through UH, or you can go to interactive brokers. I mean, there's a lot of different fixed gateways. And we speak Esperanto, like ULink. I mean, there's a lot of different interesting features here. So let's say we configured our system that way. That's it. I just kind of click on apply command, and in essence, all this ecosystem would be deployed and available for your consumption. Everything in this pink box, it's a kind of server-side technology, so it's assumed that it will be hosted in some kind of data center. However, in some cases, it runs on laptops perfectly fine. It's not tiny, but it's a scalable technology, meaning that especially like TimeBase and UHF, they're written in a way that it can be deployed on the blades like my laptop. I'm running demo today on a laptop, and I'm going to use all this configuration in my laptop. Perfect. So next step I'd like to do, I understand that you guys might have questions, but at this point, let me just jump through the demo, through material, and I will go to questions at the end. So I'm running the session on my laptop, and so I'm warming up a particular instance of TimeBase, which I call Sandbox. And inside this instance of TimeBase, we're going to have few examples of data, which I pre-populated ahead of time, and this is something which obviously TimeBase is capable of doing. So let's go and look at this example. I am running everything locally on my computer. This particular database is around 60 gigabytes. It's not small, but it's not obviously big by no means. As I said, we work with terabytes of data. But the main thing is I'm not going to do any cheating. I'm not populating anything to memory. I'm not playing you some stuff which is already pre-calculated. It's going to be all raw data. And as you know, I'm running also recording sessions, so my CPU kind of obviously used by multiple processes. Still, let's look at TimeBase. Data stored here in multiple streams, starting from security meta-info, where here we're defining each element of our universe. Like futures, we have continuous contracts and kind of rolling rules defined at the level of database, or it could be defined per strategy. We've got Forex data, we've got equities data, we've got raw futures data. So this is where we're defining just basic underlying instruments, including, for example, in this case, with the IQFI identities. For equities, we keep track of CDOLs, QCIPs, and ICINs, all the normal stuff. And next, let's go to look at some samples of data, starting from daily data. So I'll go to, for example, daily equity data, and click on Apple. I'll click on Apple View, and in this stream, I recorded daily data from 2005 until just 2012, almost 7 years, more than 7 years. Let me show you how fast I can access this data. Clicking on this command, I'm going to get charts, and clicking on 10 years, this is how long it takes me to put 10 years of data, specifically 9 milliseconds. And again, at any point I can zoom in, or I can zoom out to 10 years, and this is how long it makes me to produce this chart. Now let's do 1,000 charts. That's how long it takes to produce 1,000 charts. It's really pretty cool. So 1,000 charts takes me to produce like 4 milliseconds, because as I scroll, look at the bottom. This is data get loaded on the fly, and so now I'm loading million bars per second on my laptop. Today I'm going to show you examples where it will be 3-4 million messages per second, and that's again, of course, the core strength of our technology. So I'm just zooming deliberately to the 30-year window, and so here we are. Well, great, it's daily data. Obviously, it's kind of impressive, but what's the big deal? Now let's go to look at 1 minute bar data and see what I'm going to do with it. So at this point, this is data from 2007, minute by minute, exactly the same 5 years. And so let's see how long it takes me to produce 5 years of this data. That's it. So I'm pretty fast. 52,000 bars loaded in 32 milliseconds, so here's the speed. And this is 1,000 charts. This is it. I'm basically browsing through the data very fast. Like with this type of speeds, that's what's really good about TimeBase. It's specifically designed to process and access really large sets of data. And so I loaded 500,000 messages in 2300 a second. Of course, it's a lot of them. And so going back to tick data, we'll be enjoying similar experiences where Apple, I can view millisecond timestamp stream. Data here represented as a collection of trade messages and best bid, best offer messages. And so if I browse through this data, this is the best bid, best offer, and superimpose the trades, and zooming out to 30 minutes of market. That's now getting large numbers, 40,000 messages, and all of them, this is it. So this is my kind of world. I will not go into level 2 data. I'm just going to stay at the top of the book, but basically tick data is processed in this environment pretty fast. You can represent additional data sources like news data from Dow Jones, for example. Every stream here represented as a sequence of just kind of messages again. Or you can look at the data from rate and pack, or you can have your own taxonomy and store, for example, in this stream, I'm storing signals. which are generated by a strategy which detects crossovers. So in essence, you can build your own message, like two indicators cross, first indicator current previous value, second indicator previous value side, and record every time signal generated just as independent signals, and you don't really depend on and then you can subscribe to the signals as basically as if it's a raw data feed. So that's kind of the data. Of course, there's a fundamental data where we're storing quarterly factors, or even more interesting data like, for example, data explorers, hard to borrow, hard to sell instruments. This is just hundreds of columns represented, and this is more like what you expect from an institutional system. All right, that's a TimeBase. So it enables people to load and store any data. And if I jump right now approximately 300 miles and go to this server in a city, which is basically configured in a way you kind of saw. So I'm getting feed from CTP, and I go right now to this instance of TimeBase. We will see exactly what you would expect from any institutional kind of a desk. We're aggregating data real time as we speak. The tick data get populated and recorded tick by tick, day by day, and minute by minute. Basically, this aggregation started at, if I go right now to view the stream, in February of 2012, and we're storing data as we speak. It's just getting populated, augmented, and recorded and enabled, so that all historical data would be exactly the same way you're going to use it in production as you used. You will use the data in research just exactly the same, which will flow through your pipes when you do production deployment. Okay, I'll leave this data set for now, and I'll go back to my computer. Okay, so this is the TimeBase. Now let's go to Quant Office and let's have fun. Let's just start from me telling that you got multiple connections. You can basically connect to different instances of data, but we'll use right now Sandbox. And first, the next 5 minutes, I would like to build a strategy, and I'll use tick data for creation of the strategy so that it would be more fun. And let me just take 1 day of, like I will choose some information because I don't want to spend a lot of time. So we'll go and we'll take 1 day, 1.5 days of tick data. I'll bring, we have multiple bars, and so I can just use raw tick data. So let's go trade, bid, and asks for this period of time. Let's say I'll choose right now Apple and Google and Goldman Sachs. So I'll bring this data. I don't know what it's basically asking me, but I'll say yes. All right. So the data is being, while data is being fetched from the TimeBase, and what we're seeing here is pretty much data as it's being recorded. It's just, again, some sample data from 2010. We have national bids and consolidated bid, national ask, consolidated ask. Let me just blank national bids and asks. And let's quickly go and build some strategies which could be used by us and illustrate the idea. So let me actually build first something called mid-price. I'd like to build a strategy using mid-price. So I'll take bid and ask as a stream, and I'll tell system that I'd like to basically be weighted 50-50. And so as I click on this, we'll immediately create the stream, which would be sum of 2 divided by like, let me show you what it's doing. Beautiful. So if I zoom in, yeah, let me just also change one color. I apologize. This will make it blue. Right. So you can see right now that mid-price hovers between blue line and red line constantly. So any jog of red or any jog of blue will be inherited, and so it's indeed the mid-price. So now, and it's the same for Apple, it's going to be the same for Google, it's going to be the same for any instrument. So let me go quickly and blank ask and bid, we're going to use mid price as our kind of a signal generating stream. Now let's just go and build, say, Bollinger Band. But here's a very important part. I'm going to build Bollinger Band using the tick data. How do you do Bollinger Band in tick data? How do you define what's the window? And so we've got extremely important feature where for tick data, we always have ability to define like 20 ticks ago, 100 ticks ago, or you tell system that I'm actually interested in, let's say, 2-minute Bollinger Band. So the rolling window would be every 2 minutes. So every tick I'm going to go back 2 minutes, and I'm going to grab all the ticks and go next tick. So obviously it's a crazy amount of calculations required to calculate 2-minute Bollinger Band with 2 standard deviations. However, the system is very fast. This is my 2-minute Bollinger Band. If I zoom out to 4 hours, you can see it pretty clear. This is bottom line, this is upper line, and if I switch to this format, tick by tick, I mean, I got second resolution. We're looking at the bid, ask, mid price, and all the Bollinger Band components. It's all represented in tabular format. Perfect. Now I'd like to do one more thing, which is extremely, to me, valuable. Let's calculate correlation between upper band and lower band. Let's go and calculate moving correlation between these two entities. By itself, it's a pretty interesting task, and you obviously need tools to do it. So I'm going to say between upper band and the lower band, let's calculate again, let's say 5-minute correlation. Again, I click on this command, bingo, correlations are calculated, and here we are with the bottom. We're seeing this correlation line. Let me zoom out to, let's say, 1 hour, and I'll scroll it a little higher, or if I go right now to 2 days, this is your correlations. You would expect that Bollinger Band, and you can see sometimes I get these crazy prices. This is what I recorded. You would expect that correlation would be pretty high, but it's indeed not necessarily high. And finally, I'll put one predicate, which will tell me that if correlation is greater than 0.6, I'd like to pick up only this. I'd like to keep up with this predicate. So 0.6, this is going to be my correlation. And I click on command add. It gives me predicate. Let me just put it on top of moving, make it thick. This is it. I built this very nice case study where we're seeing every time when correlation greater than 0.6, we are positioning to 1. Every time it's less than 0.6, we are calling it 0. That's a kind of delta function, and I put cursor to 0.6, you can see exactly what happened. Great. Now I'll go and quickly start building trading strategy. It's almost going to be like in English, because eventually I'm going to produce the C# code out of it. So I'll call this mid price, I'll call it Bollinger Band, and I'll call this factor moving correlation. And so let's go and build some trading rules. Let's go and buy $10,000 worth of instrument when position is flat or short, and our price, mid price, is let's actually do not the traditional Bollinger Band strategy, but let's do breakout strategy. Let's buy when we're above upper band. Let's just make some interesting feature. And you can see right now that all the signals, as soon as I put this rule, every time with the price above upper band, this is the signal. And I'll make one additional rule. I'll say and correlation is greater than our number, which was 0.6. As soon as I do it, we'll immediately reduce amount of signals. And you can see every time when they bolt, we don't trade, only when they one we do. That's going to be our buy rule. I copy this rule, I paste it, and I convert it to sell rule. And I'll tell system they're going to sell the same amount when position is, well, I'm buying, sorry, I'm going to buy when my position is flat or short. And I'm going to sell when my position is flat or long. Yeah, that's much better. And mid price is going to be below lower band. So that's our kind of breakout strategy. That's it. I've defined these two conditions, and at this point I push this button, and it will write C# code. So let's call it BB breakout 606. Oops, 06. I click on OK command, and the code is about to be written. That's it. That's kind of what took us 10 years to develop. Let's look at this. So we've gone to Strategy Manager, and this is just a collection of different strategies which are available for us. And this one, which is the tick strategy, at the bottom, BB breakout 06. So what actually happened when I wrote this code? We wrote automatically all this stuff. And in fact, I can go to Visual Studio, and again, I apologize if I bore some of you with such a level of details, but that is the essence of Deltix. You go to Visual Studio, and right here, you can bring Strategy Designer, you can bring Strategy Stencil, which are kind of our technology, embedded right into Visual Studio. So that's kind of, again, very cool. And I basically click on Instrument Executor, which is a class, and inside different events, there's going to be event on init. So we're initializing Bollinger Bands and correlations and all this stuff. And later, we'll walk through our designer. And we're going on tick event. And the code is here is really simple. Like if quote is a bit updated or ask updated, recalculate mid price, and then work with Bollinger Band. By the way, if I type Bollinger Band inside Visual Studio, all our basically repository, including historical, capacity, or all this stuff is available right in Visual Studio. So anyway, we can compile, link, and run from here, or we can go to my code, and let's come here and study a few seconds. I can request tick data, I can request level 2 data. This is all available. With this, various types of events get available. So events like on bar close, on after bar close, on day open, on day close, at portfolio level or at instrument level, and all of this stuff happening right here. So I'm not going to bore you with details. Let's quickly just simply jump through the code one more time. I'll show you a couple of other interesting features. So every time on tick event, we're calculating mid price, we're calculating Bollinger Band, like basically recalculating on the fly, and basically calculating moving averages. By the way, if I want to parameterize the strategy and make it to be, let's say I want to introduce a standard deviation window, I'll create a double, I'll call it R, and put a question, that's the df, and by default it's 2. As I saved it, we're writing code again, and in Instrument Executor, when we're allocating Bollinger Band, instead of 2, I'll call it R. This binding will be done runtime on the fly. So I'm building the strategy. And one more feature I'd like to show you, this is also a cool feature, is diagramming language, where you can pretty much walk through the picture and understand what takes place here, and just basically deal with the code through this kind of user interface. We'll spend additional time later how to work with Strategy Designer visual ones, but at any point in time you can basically drag and drop things and move them around and do all the stuff. Code by itself is really simple. It's basically, because everything done in this object-oriented fashion, recalculate Bollinger Band, recalculate correlation, and then rules are almost written in English. Each position is flat, and O is short, and we're above, we're creating market order, and we're sending all those orders to request coordinator at the end, portfolio request coordinator, process all the requests and trades. This strategy doesn't do anything with order management, so let's just run it, let's see what happens. So I click on Command Run, and at this point, I will define my universe. So this is the component which will be very helpful when we work on optimization or any other techniques, because in essence, this something called strategy runner could be called from any external utility. And strategy could be written in any language. You can basically, from on bar close or on tick, or from on order status update or cancel, you can program your own events in any kind of environment. So Apple, Google, Goldman Sachs, let's also get JP Morgan. I'm basically going to keep this date. This interesting feature allows us to visualize all different orders which are supported by the system off the shelf. So there's tons of orders: limit, market, stop limit, VWAP, TWAP, trailing stop order, every order has the following states: from pending submit, pre-submit, to field, cancel, rejected. Every state you can also define side, and for each of them you have a visualization technique, so you can basically render everything and understand as it goes. So what I'd like to do, I'd like to simulate everything on bid. I don't need bid and ask. So let me click on command start, and this is a parameter window. So our standard deviation is 2. Let's compare 2 and, for example, 3 standard deviations. Let's see what happens. So we're going to run 2 scenarios side by side. But this is execution management processor, which is really what I told you when I said about execution engine working in several type of environment in the same process, but in different thread. We have ability to simulate on trade, BBO, mid-price level 1 or level 2 if we got level 2 data. For each order, when we fill it, we got slippages. We got basically, when we're simulating on bars, are we simulating bars, next bar or current bar close? If we simulate limit orders, touch or cross limit, and we can simulate latencies in milliseconds. In this case, I'm going to do backtesting on next tick. And so let me click on Command OK, and let's run. And we're going to run this backtest, and we're going to watch every single trade decision as it's going to be produced. So as soon as our correlation greater than 1, we start producing orders, and well, we'll see what the strategy is going to do. And so this is P&L chart at the bottom for this P&L chart for Apple. So I deliberately did break out, so I don't I didn't want to make a lot of money or lose money. It's just an example of idea. This is my portfolio chart, which illustrates my P&L at the level of portfolio. And we can see at the bottom each individual curve, contribution for each individual instrument. And again, we're processing tick data in one core. On my laptop, I'm running 2 different strategies simultaneously. And so at the end, we will be done. And let's see what happens. Okay. So this is the first scenario where we're using 2 standard deviations. And this scenario seems like making money. And this is the second scenario where we're using 3 standard deviations. And it seems like this scenario is not as successful. So that's beautiful. We can basically compare 2 different implementation options. And well, I requested data for a lot of time. So let me just stop it. And let's see what happens. So we've got reports. We've got trade reports. We produced already 3,000 trades. So as you can see, and for each trade, we're calculating entry conditions, exit conditions, and this particular trade, these trades are very fast. So this is something I program in strategy, which basically, because Bollinger Bands are like, you know, happening probably very fast. We're calculating also excursions, adverse and favorable on the tick data. We can look at everything and put things in perspective by simply analyzing the distributions. For example, profitability, we can zoom in to every trade bar. We can analyze scatter plots and find out relationship between, for example, excursions and profitability. So this is just system for analysis. And so with that, we can look at every single trading decision the system makes them. So when price is above upper band, right here, which is basically going to do a lot of trades, and this is our P&L reflected. So that's kind of the bottom line of what this tool is doing. Most of the time in this particular strategy, we're spending in this kind of areas where there's a lot of noise. Later we'll filter those noise because we get the spikes and they will make in this noise. Okay, so that was just the basic backtesting. We wrote a strategy, we backtested it. I'd like to show you one other example of a strategy, which is the I like to present. In this case, we basically taking Kelton band idea, and on bar close, we will be sending orders exactly what you expect. In this case, mean reverting orders. But what I'd like to do, I'd like to play with execution strategy. So instead of me sending limit order, I'm basically going to send, I'm going to buy by saying that I'm going to buy at the price below current price with user-defined offset. So we're going to play with the simulation, and so I shifted by a certain amount of ticks. And with every order in this strategy, I will also have order status listener, position size listener, position change listener, so I'm getting back notifications. And when I submit limit order, right here, when I submit limit order, I will be creating timer so that if order is not filled within a certain period of time, I'm going to cancel the order. And also I'm going to paint background in a gold color. So when order gets submitted, I'm going to visualize it. And so let me build and run this strategy. And again, I'm going to run multiple scenarios to illustrate certain capabilities of the system in a kind of, I think, nice way. So we will be sending orders, and I'm going to take 2 tick offset and 8 tick offset, and I'm going to wait for 5 minutes and for 20 minutes before I cancel orders. We're going to run 4 scenarios. And as I do it, we'll be watching every single, again, backtesting execution precisely. And if I zoom out to 4 hours, just give me 1 second. I must tell the system that I'm not interested in trading. Just 1 second. Sorry.
Yep.
Right. There's something is not working here. But anyway. Oh, I'm using tick bar. Right. Sorry. I need to use TimeBase bar. Sorry. Just give me 1 second. I need to modify the strategy because I used the bar which is not appropriate for this task. I need to replace it from tick bar to TimeBase bar, and you use bar, for example, to be not 100 seconds, but let's do it 30-second bar. Okay, apologize, and let's run this quickly, and we'll see. Strategy will start trading because the signals will not generate right. So what we're seeing is exactly what we expect. So as okay, let's zoom into some yellow area and watch what happened. As this bar is above upper band, we are sending the limit order to sell. And if I zoom into this area, this is the area where I'm sending signal. This is the offset. So 8 ticks above it. This is where we're putting the price, and we're waiting for the price to cross it so that we can sell it. So if I zoom out to 5 minutes, we will see all our fill prices, and we will see how they all get filled. This is the information. So anyway, let's make a long story short. This is our some orders will never get filled. So like, for example, this order, we are buying at this price, replacing order in the book at this level, the price never crosses it. So the 20 bars later, we basically cancel the order and it's not get filled. Okay, and as a result, we're looking at impact of this different tick distributions. And so let me again, we almost finished this backtest. Let me just finish it, and we will compare performance of 4 different scenarios, and we can see that difference is quite significant. So if I play the game to limit spread and wait for 5 minutes as opposed to 8 and 20, the impact of this execution quite significant. So we didn't change anything in our alpha strategy, we just only changed the execution style, and we'll see that waiting longer before canceling orders in this particular case definitely has profound impact. In fact, we can also go to order report and see if I'm running 5-minute pending time, I canceled 22 orders, and if I'm running on the same exact conditions, on the same exact conditions I'm running, this is the same similar 20 minutes, I cancel only 10 orders. So we definitely have impact. Okay, so that's kind of the system where we're capable of building different strategies and backtest them and run reports. And so what I'd like to do now is to quickly run something in production. And first, let's go to our place at City. So in this environment, there's a strategy which currently running, and this strategy was deployed in production almost a month ago, and it just runs there. So what I'd like to do is to show you what it's doing. So this particular strategy, and again, everything we do in our system is behaves in production exactly the same way as you did on big testing. So this particular strategy works on the real-time tick data, and so it generates 20-second bars. And if I zoom in to, let's say, 5 minutes or 1 minute, we'll see as the tick data gets through. Of course, right now it's not very liquid time. The strategy is placing constantly pair of stop orders, and if order get filled, it will be just if we get into position, it would be following the order. Let me just blank some lines. We don't need them. Right. So basically, we fill this order at this level. We are in a sell short position. So that means we're going to produce every 20 seconds buy cover order, and just happened to be this particular buy cover order moved up. So I'm in the Australian dollar Canadian spot price. Let me find that position in my trading console. I mean, I obviously have problems with real estate. So this is my Australian dollar CAD instrument, and so at this point we are in a flat position. So we don't, and now we are in a long position. So we got 498,000 of Australian dollar, and it means we're going to be covering from the bottom every 20 seconds. This strategy just creates stop order and automatically cancel places. If this price goes up, the order goes up with us. I can cancel order manually. Let's say I click on this cross. This is it. I manually cancel this order, so that the strategy knows that it is to continue its job, and the next again 20 seconds it will automatically create new stop order. I can obviously cancel those myself. In fact, I can also close position manually. So I click on close position, and with that, as soon as I close position, we're immediately getting all P&L to realized, and that means that next 10 seconds strategy would be presenting a pair of stop orders. Because basically it works when position is neutral, it creates pair of stop orders. It's just like ping pong, and otherwise it bounces between these prices. If soon the order gets filled, it takes position, and it would be managing the order accordingly. So if I zoom in to 10 minutes and walk you through all instruments, this strategy runs on a lot of different Forex instruments. We can look at all of them, and we can look at any of them individually, or we can look at them side by side. So if I display them, for example, three per window, and finally I can go and see the execution. It's just a lot of trades at portfolio level. This is a pretty interesting strategy. I mean, it does reasonably well, but again, this strategy is very sensitive for slippages and commissions. So let me in fact prove it. And so that will be the last piece which I'd like to show you in the demo. So if I go to Quant Office and look at exactly the same strategy, which is a stop order, and I run two simulation scenarios. The first scenario would be running it, and again, it doesn't matter whether I'm running for equities, I'm running it for futures or for Forex. I'm going to run this strategy on 20-second bars, and I tell system that I will be filling stop orders by exact stop fill, like this checkbox. What it means that I'm going to be simulating fill prices of stop orders regardless of whether price is available or not. Specifically, let's look at chart and see what happens. Like right in the beginning, let's see some stop order which we fill, like this order, for example. We said we're going to buy cover at this level, and we just draw a horizontal line, and that's where we bought. We don't know whether the price is available at this level or not. The result is that we're filling every order just straight horizontal line, like this. So we're buying straight at this line, whether the price is available or not, we don't care. P&L in this case looks pretty fantastic. Looks similar to what we saw in this simulated account in Citi. But if I change only one parameter of this strategy, and I run only exactly the same strategy, stop order, and instead of a precise simulation, I'll go and I tell system that no, do realistic simulation and use next available tick price for backtesting. Impact of that is clear that, for example, here, instead of horizontal fill, we're going to use next available tick price. Instead of horizontal fill, we're going to use next available tick price. So all our straight horizontal lines will be slightly, slanted as a result of this particular phenomena. The backtesting now shows something like that. And with that, I'd like to kind of finish the official part of my presentation. So as you can see, changing only one parameter in backtesting completely or radically changes the whole P&L story. The strategy by itself didn't change, but the simulation mode definitely did and impacted it severely. You got exactly the same amount of trades in both cases. We run and we look at 928 trades in this scenario and 928 trades in this scenario, exactly the same trades, like exactly entry exit conditions, but the distributions of them definitely would be different. And that's kind of the bottom line of our system, that it allows people to compare and backtest things with a pretty high level of precision and accuracy. All right, that kind of is my official presentation. Now I think there will be a good time to do question answers, or Brian, maybe you suggest what you would like me to do.
Well, we got already, just first of all, a lot of really awesome comments have already come in the chat mode. I don't know if people want to retype them out. We have some questions about if you can do everything, all the strategies in Java, some questions about TimeBase. So if you guys want to either type up your questions in, we already got a couple questions coming in already.
Right. Well, the best will be for me, Brian, if you read question and I'll answer that, because that way, I know that one great question: can you build synthetic instruments? Yes, absolutely. And synthetic instruments is something we are extremely comfortable with. That's basically what we do. I'll just simply show you the sample of code. The pair class will be just simply accepting as input 2 legs, and will have its own on tick signal, on tick event, when either leg receives the event, you trigger. So this is pair trader class, and right at this level of pair trader, you build your own events. So it has 2 different legs, and so, for example, pair adjustment factor and update pair, you get leg 1, leg 2, and let me show you pair price calculator, how is really cool. You got 2 prices for legs, and you basically return relative price in this particular case. That's what we do. And on bar close, you go through update pair. I mean, you program strategy, and you deal with pair like actually as if it's a native instrument, because you basically take the price and you calculate 2 exponential moving averages. As this is a basic crossover strategy which works on the pairs, but it doesn't really care whether it's a pair or anything else, because as long as you send as a price calculator, it will take care of it. So yes, answer is definitely synthetic instruments are very, very happy with them.
Okay, we've got a bunch of questions coming in. Victor says, excellent presentation. We've got 2 questions, actually 1 question. When creating trading rules in the designer and using Boolean operators, can you mix and match and group ands and ors?
Yes, of course. You can program any Boolean logic. You ask him if I can do it in GUI, then probably, let me see, I don't remember. But definitely, once I generated a template, I can go manually into the code, like we created this code, right? Breakout 06, and I just go here on tick event, and I'm free to do whatever I want. In fact, for me to change the logic, if it's flat, it's short, or right, today is Sunday, I mean it's Monday. Whatever I want to do, I can do right here. And very good question about TimeBase, what kind of backend storage it uses. It's definitely not SQL. It's definitely not anything which it's all very proprietary. It is like this is it. This is the know-how of us, and this is all testing connectivity between TimeBase and C#, and we're always updating it. In this particular case, without even caching, without warm-up, without anything, just straight from a disk, I'll be running it. It would be. We're going to see just results in a few seconds. It's like I'm running for 2 weeks on basic tick data. Basically, performance 1.2 million messages per second. We loaded 21 million ticks in 18 seconds. So that's pretty cool. So no, it's not SQL, definitely. You would be able to do it in SQL.
Okay. Dave's got another question. Just jumping on his previous question, are there any limitations on the basket size for synthetic instruments? Example, having a 1-second refresh that is based on 1,000 instruments.
No, I don't have any limitations other than common sense. So.
Can you make custom indicators, and can they be used in Visual Alpha?
Well, yes, you can make custom indicators. I mean, basically, Visual Alpha is the one I showed you. I mean, we discontinued kind of the standalone thing called Visual Alpha, but when I showed you building strategies from charts, that's kind of the Visual Alpha. And the answer is yes. You can embed custom indicators to the GUI, and you can embed them in. There's 2 places where custom indicators could be invoked. If we go to, again, any strategy, let's say I'm just randomly taking strategy, right here you have ability to also add components, and you can bring indicators right at the level of the strategy editor as well. So you can bind any indicator into this. There's definitely there's a GUI, there's a document which describes it, and for example, this weighted sum, it's my class. I wrote it myself. And so I put it and I use it in the demos.
Okay. There's 2 questions next. They're back to the SQL related, but I'm going to combine them as the same. Does TimeBase provide an ODBC connector? And the other question would be, since it's Java, wouldn't it be JDBC?
Well, TimeBase does provide some kind of level of SQL connectivity, but again, this is something which needs to be addressed on demand. It's somehow we rather load data from SQL to TimeBase, and instead of doing GPC connectivity runtime, we basically providing much more powerful replication capabilities, and so we're replicating data from SQL to TimeBase, and we do it. You can do it as a batch process. You can do it based on schedule, because TimeBase streams data much faster than SQL. I mean, if you're dealing with daily data, if you want fundamental data, then yes, you can use a GPC because it's not really that. But then you can do this connector straight from a strategy. It may, in some cases, .NET 4, it's easier to do straight from SQL without even TimeBase.
Okay, Victor's got a question. Actually, Adam said, very nice. Victor says, can you build a strategy that references chart types based on a time series and price action? For example, Bollinger breakout if Renko is going up.
Sure. I mean, in fact, one thing I do want to show you guys. Apologize. I do want to show you something. I forgot, and I feel it's important. Going to go quickly to this setup, and I will show you one example of a strategy which say takes macroeconomic news and process it, and it will explain how we deal with events. Literally, it will take me 1 second to just illustrate the concept, but I forgot to even talk about it. And it's kind of important, and it may explain a lot of things. So see, I'm just going to go right now and switch my point from Sandbox to DCS, which is our Deltix cloud service. And what I'd like to do is show you one example of strategy called News, which deals with the macroeconomic news from a Econo Day data source. So this particular TimeBase uses extended bars and uses the Econo Day information, and this strategy called News Econo Day Equity, for example. It's a very elegant style of programming because of events. So I subscribe to Econo Day messages, and with that, system immediately has a listener called Econo Day message handler. So basically, it's all done automatically through code generator. So when I'm going through initialization on a init, first thing happens, the waiting listener called Econo Day calendar message handler. And that's the callback. So anytime Econo Day data stream has new event, we're going to be notified. And so inside this callback, I can program any logic I want. So in this particular case, I'm just saying that if my trading hours are such and such, and message, and see I'm getting full taxonomy from a message from a database. It has all this information, actual attribute, and date and time. And so I'm basically saying to the system that if my message is high importance and it's related to banks and the country is USD, all I'm doing, I'm just creating two limit orders for buy and 2 limits of sell, and I'm going to wait for 5 minutes, and I'm going to basically close the order if it's not filled. That's it. So if I'm going to close my position if I don't fill orders, and I cancel all orders. So this is the whole code. You see, this is just happened with event. So I don't know how to program it otherwise, but this could be relevant to answer question what happens if Bollinger Band up or anchor bar is down. I can build my events. And so when I run this particular strategy, I don't want to show how to put together. I'm going to run it for a few instruments on 2.5 years, 3 years of 1 minute bar data, and the picture is going to look pretty cool because it's going to give me it's going to give us full audit of all events. Whenever chairman of the Federal Reserve speaks, we're going to see event, and we'll basically look. And again, I'm running multiple scenarios all the time. This is the style of me running things. So like this, Federal Reserve talks, replacing orders, we put them in the book. These 2 orders get filled, this order get filled, this order get canceled. At the end of 5 minutes, we cancel the whole thing, and that's it. And this is your strategy, and this is your P&L, and it's pretty good P&L. And there's different combination of parameters. And all I'm illustrating here is the ability to process complex events in a relatively simple way, definitely fast. Sorry, I answered this question, but I also wanted to include something which I forgot.
Okay, Adam's got a follow-up on the SQL or TimeBase stuff. I still want to know any storage calculations and the size. For example, gigabytes of data based on specific time periods in any one stock.
Well, let's put it this way. We don't really compress data that much when we're putting in a binary file. We think that disk space are cheaper than, they're going cheaper and cheaper than CPU and the time we're waiting. All I can tell you, the database I'm using right now, which has approximately 1,000 instruments, mostly daily dated 1 minute bar data, and few instruments have tick data, around a year of tick data. It's pretty much 60 gigabytes.
Yeah, we got another question. What is the workflow for defining symbols? Do you make it easy to access fundamental or GICS sector info per symbol? That's from Dave.
Yeah, that's easy. There's a workflow for defining symbols. You can go to security meta info stream in TimeBase and populate this information yourself, and there's the import-export utilities. So I would consider it's easy, but some people may consider it difficult, but in reality it's there. It's just a matter of... I would like to also mention something. In general, there's something called DDN, which is Deltix Developer Network, which is like MSDN type of thing, Microsoft Developer Network. We keep track of this question answers, and people submit their questions like a forum, but with specific flavor. There's tutorials here, subscribe to, and there's videos, there's strategies, there's a lot of stuff happening here. There's documentation. We do have a lot of documentation about quant office, and it's all definitely available. There's documentation about FinMath. So it's pretty much, we're trying to do our best to help people use our system, of course.
That's awesome. Mark's got a question. Does the platform have OMS features like EZE OMS portfolio rebalancing between different strategy baskets depending upon market conditions?
Well, that's what I told in the beginning, that if we go and deploy it in this type of a scenario where it'll be standalone execution server, there could be some separate strategies written here to rebalance. So in a way, we don't really, we didn't implement yet fully blown portware and flex trade type functionality on for each. We work with them and we understand what they do. So answer your question, yes and no. It can be implemented. All the functionality, all the APIs available. Whether we can claim that it's just a matter of you defining your risk factors and stop limits and automatically rebalance thing without programming, answer is no. We'd have to program something.
Okay. James got a question. Can you use unique bar types, like for example, Renko or range?
Yeah, I mean, you can build your own bars. I mean, we have library of bars, and they all included as side plugins. But based upon what I showed you, you can basically develop from underlying tick data and build any aggregation facility. Like you can pretty much create a cutoff at any point.
Okay, Bart's got a question. Does it mean that I can trade news releases with the Econo calendar events called in the Stratos strategy?
You definitely can trade news releases, absolutely. And you can definitely trade any news that releases. You can trade any events because this is kind of abstract event, and just create your event handler and plug it in and trade.
Okay, this is related. Can you import Twitter feeds in TimeBase, or C# or Java will do it?
You can import Twitter feeds if you know the taxonomy of Twitter feeds.
Dave was asking, I guess, to another previous question is, what's the source for this new information? Just looking for, I don't know if he's referring to unique bar types. Not sure what that's referring to. Sorry, I think he's referring to news.
Right. What's the source?
What is the source for this news information? Sorry.
Yeah. The source of news information in the one I showed you, it's Dow Jones, and then there's a Raven pack, and they processed the raw data feed from Dow Jones, and they create machine-readable sentiments. So but this is the whole area of sentiment analysis. Deserves separate conversation. We do a lot of stuff around it. We can have a lot of other questions, and I would love to answer them all. Maybe we can put them in email or some follow-ups.
What we can do is let's get a gauge of how many people would be interested in this type of service. Because why don't you talk about the Deltix cloud services, Ilya?
Mm-hmm.
About that offering, and I mean, what you were talking about, what you were interested in doing, maybe bundling some people together and put them in as one account.
Right, that's another option, right, definitely. I mean, in general, what we've done, because like I said, nothing could be more exciting for me than to have more people using my system, and as a result, making it better, we put something called the DCS option, and it's all running right now in research mode. So what I've done, I click on DCS. It comes pre-populated with data, and this is expensive stuff to some degree because, again, like I said, lifestyle, it's not a tool. It's just for us, we're taking raw data from IDC, terabytes of data, and process it, and give very, very high level of attention to details. Like for every futures contract, there's 2 different streams. 10-second stream you can basically look at, and 1-minute stream, and you look at open high-low close and time offsets and message counts and best bids, bid ask, and this data for 3 years. And it's available over internet, and you can basically come and say, I'm interested in getting, for example, Forex data or futures data, and what you're basically seeing right now in front of you is me going through my Comcast, for example, network, and I'd like to order, for example, data from Forex and data from futures. So I'm going to give 2 contracts side by side. I mean, obviously, it's not necessarily a smart thing to do, but I just show you. And I load it for, say, 1 year, and I bring it to my computer. So at this point, query is happening. Data gets streamed from New York to my desktop. And I could cache it locally, and I could then utilize it locally. And I've just requested all this information. I'm getting it. Speed is approximately, because again of all the network traffic, is approximately 20,000 bars per second. Obviously, it's not millions anymore because I'm bounded by internet. And once you get this data to your computer, then you're free to store it locally, do any research, and then if you want to trade, there's 2 options to trade. One is currently in development. We're trying to basically go through fixed connection with IB, or you can go through brokers and do real professional service, and you can rent your server at the tier 3 cage in New York and be institutional. Obviously, there's cost associated with it, and so what we think could happen, we would be really interested in maybe, sometimes you have roommates, so you can't afford maybe luxury apartment yourself, so you can have a roommate, and together you'll share the cost mainly of the services and maintenance, and that's something we definitely open for discussion.
Okay, why don't we put what I did was I put my email in there. I don't know how people want people to reach out to you, Ilya, directly.
Sure, I mean, I have no problems if they reach out to me, but I prefer, honestly, if it's going through you.